Well, this is Michael Douville, and it is November 2nd, 2020. I'd like to talk about my timing model and inflation today. Now, for the first time in about 15 years, I can actually see inflation starting to percolate through the system. Now, it's just entering into the pipeline, and that's a pipeline of goods and services, so you probably won't see the real effects of that for maybe 8 to 12 to 15 months. But keep in mind, we have been very, very fortunate because we've had very, very benign inflation since the year 2000. I don't think we've gone over 3%. It's been somewhere below 2, sometimes below 2, sometimes a little bit over 2, but fairly benign. It's also cost us 51.5% of our purchasing power over the last 20 years with benign inflation. 51.5% of your purchasing power is gone with benign inflation. Now a lot of my clients are getting ready to retire or are retired. They've retired from their income. Most of them are retired from their jobs, and they're living on their savings and their investments. So purchasing power is extremely important to be maintained because we're going to live a lot longer than we think. We're going to live to be 85 to 105 years old. A lot of my clients are going to be retired for 30 or 40 years, and they don't want to be paupers when they're 95 years old living out on the street. And they don't want to have $1 million and find out that it really only buys $1,000 because inflation has just torn them apart. Now, talk to your financial advisors, but one of the great inflation hedges is one of the most compelling investments for the next 4 or 5 years, and that is residential rentals in the great markets of the United States. That's Florida, Texas, and Arizona. This is where the population is going. This is where all the business is going. This is where there's so much opportunity in residential rentals. Getting into a residential rental will maintain your purchasing power because as inflation comes in, the value of the property goes up. As inflation comes in, the rent goes up as well. So if you have a 5% inflation, your rent will go up 5. And sometimes when you're in one of the great organic growth markets, it's going to go up more than the inflation rate. If it went up 5, it could go 6, 7, 8%. Here in Maricopa County in Phoenix, we're up over 8% already this year because of the growth. You're going to find that in lots of markets around the United States. Talk to your financial advisor, talk to your spouse, talk to your estate planner, and see if this is going to work for you, because this will help maintain that purchasing power for yourself. This falls right in line with my timing model. Now, my timing model is based on an 18.5-year real estate cycle. It's been fairly accurate. Matter of fact, it's been really accurate. But there's no guarantee that it's going to continue to be accurate. Now, my opinion and from my model is that we're looking at much higher prices 4 or 5 years from now, in which case it gives you a great entry point if you have not been participating in the real estate business to enter into the marketplace, because we probably have a correction in an ongoing bull market from here for the next 4 or 5 months, which gives you a great opportunity to get into a compelling investment for yourself. Now, interest rates are heading down. If we get a little bit of an economic blip, this would be great. But keep in mind that we've seen the liquidity from the Federal Reserve and the Treasury of about $6.3 trillion went into the economy in about 60 to 90 days. You saw the stock market react immediately, but Main Street, it takes about 12 to 18 months before it comes through into the average households and into a normal economy, in which case that's when the real estate is going to start feeling that. That fits right into our timing model, and they're talking about putting another $2 trillion out. Worldwide, they put in about $21 trillion. So just think what's going to happen to that liquidity when it gets into Main Street. The best is yet to come. Talk to your advisors, talk to your spouse, see if this is going to work for yourself. It's a very, very compelling investment, particularly for this section of the cycle. If I could help in any way, just let me know. See you guys. Bye-bye.